Well, jobs are in focus today with the US releasing all-important non-farm payroll numbers for May this afternoon, which are expected to show growth of 513,000 jobs. But this is just a fraction of the number of jobs lost over the past couple of years. Here at home, the employment situation remains equally dire, with over 1 million jobs estimated to have been lost since the beginning of last year, and official unemployment rising to over 25%. Well, joining me in studio to discuss all this is Dawie Roodt. He's Chief Economist at the Efficient Group and Loane Labour Market Analyst at Adcorp. Good afternoon, gents. Thanks very much for coming in.
Thank you.
Of course, Loane, unemployment over 25%, but the number of economically inactive people sits at around 45%. 74% of those under the age of 24, a very dire situation, as we said.
Yes, absolutely. Unfortunately, it's not one of those cases where you can report positively. We currently have in the pipeline about 5.8 million students who will be looking for work in the next 4 years. And if we look at recent trajectories over the last decade, you'd say the unemployment rate could very easily rise above 30%.
Dawie, why are we not doing enough, and how can we do more to try and create jobs as the economy starts to grow again?
I think the emphasis is on the wrong place. The emphasis is on unemployment in South Africa, and I don't think that's where the emphasis should be. There's only one way. There's only one way through which we can address unemployment in South Africa, and that's by growing the economy. Of course, in the short term, you can do all sort of funny things. You can build roads or bridges or whatever and absorb some of this unemployed into those specific projects. But I'm afraid the only sustainable way of doing something about unemployment is growing the economy. And therefore, economic emphasis, policy in South Africa must focus on growing the economy and see what we can do to grow the economy, and there's a lot more that we can do.
Well, the economy is expected to grow by about 3% this year. Is that growth enough to create jobs? How fast do we need to grow to absorb more jobs?
To do something really about unemployment, we need to grow this economy at 4-5%, and not only 4-5% for 1 or 2 years. We have to do it for a number of years before we really make a significant dent in unemployment. 3%, I actually expect about 3.5% growth is certainly not going to do much about unemployment, no.
Well, then you came in recently to chat about the Adcorp Employment Index for April, and that showed that there was a stall in employment between March and April. And of course, that's probably backed up by the PMI data that came out this week that shows the employment segment of that index also started to fall back in May. Why are we seeing employment growth stalling as we head into the recovery?
There are a range of reasons. Some of them are long-term and some are short-term. I mean, the long-term reason is that the South African economy has been reducing its dependence on labour for about 40 years now, but most pronounced over the last decade. Last year alone, South Africa's labour intensity fell by 8.1%, and cumulatively since 1960, it now takes nearly 40% fewer people to create a unit of productive output in the economy. So that's the long-term story. We have a long-term systematic decline in companies' dependence on labour. But then obviously we have the short-term consequences as well. What for me is worrying is that as we are showing signs of an economic recovery, we've had really, relatively speaking, outside the financial sector, a comparatively modest recession. There's no recovery in jobs yet in the offing. And if we look at how we're trailing other countries around the world, it may well be another 12 months before we start to see the jobs figures pick up.
Mm-hmm. I mean, employment is a lagging indicator, isn't it? It follows 2 or 3 quarters behind the economic growth we do see. But Dawie, just this progression that Loane was talking about on labour intensity, that's a natural progression for a country that does develop, isn't it?
Most definitely. It's not only in South Africa, it's worldwide. The difference between South Africa and the other economies in the world is that they grow so fast. I'm referring specifically to the developing economies like the Chinese and the Indians. They grow so fast that they create new industries along the way, and of course that absorbs a lot of labour as well. If you don't employ fewer people in a specific industry, it's simply a sign that you're not making progress as far as technology is concerned. So it's a natural thing, it's a good thing, that's the way it should happen. But what you should be doing as an economy is see if you can establish new industries to take up some of the slack.
Are we doing that, Loane?
No, not nearly. I tend to disagree. I don't think that 4 or 5% growth is going to be nearly enough to resolve this problem. You know, it's not well known that unemployment is a relatively recent social problem in South Africa. In 1994, using the best available data that we have, unemployment was 13%. It's now doubled to 25% and may well double in another decade. This is very much a post-apartheid phenomenon. And often when we hear the Minister of Labour, the Director General of Labour, they speak as if unemployment has been something we've lived with in South Africa since the 50s. So I think we need to have a look at the policies we've introduced over the last 15 years and ask some fairly brutal questions about whether those policies haven't perhaps been counterproductive. Certainly, I would say we need to look at contemporary policies, not historical policies. So yes, when you ask, are we doing enough? I don't think we're having some honest discussions about whether our labour policy regime is promoting jobs.
I see you nodding in agreement, Dawie. Why are our policies not working? Because there is a big focus on jobs. Every election, there's a big focus on creating jobs for South Africans. But why are we not doing it?
Stephen, I've got an example. A simple example is that I know of a guy that only employs Zimbabweans, and I asked him why, and he said because they're better workers, and there must be an economic reason behind it. And I asked him, he said because minimum wages are not applicable. He said no, it's the same. The same goes for disciplinary procedures. He said it's exactly the same. So why employ Zimbabweans? And he said
high
because
education standards.
No. Because every 6 months they have to reapply for a new visa, a new work visa, and he's got to sign for this new work visa. If he doesn't want the guy, he simply doesn't sign the work visa. That's an example of legislation that is supposed to protect South African workers, but the unintended consequence is that people employ Zimbabweans because it's easier to fire them.
Okay, so our labour laws really coming into focus.
That's very important.
And they have been criticised by a number of companies moving into South Africa, haven't they, Loane?
Yes, I mean, if you look at our policies are very conservative. Our monetary and fiscal policies are. We've caught up to the rest of the world in some of our competition policies. We've actually got a great set of policies in South Africa. But the one thing that stands out for foreigners, for local businesses considering expansion, is that our labour policies have made our labour market extremely rigid. Just to give you an example, it wasn't intended this way, but our Occupational Health and Safety Act, for example, the intention behind that is to prevent workplace accidents, which is noble, of course. But the problem is by criminalising accidents that occur in the workplace, a company director can now go and spend time in jail, not for causing an accident, but for failing to prevent an accident. So in our experience, for some of the companies who take 92,000 workers from us every day at Adcorp, we found these managers on the factory floor are spending as much as 60% of their time running around with safety initiatives, not focusing on productive activities. So when you're considering a new budget, a new manpower plan, whether to expand your employment in a factory, these things undoubtedly come to play. I think we need regulatory impact assessments before we pass any more labour laws, and I think it would be wise to go over the labour laws we've already passed and have a fairly independent assessment of what impact those regulations have had.
Dawie, the rand, we have many trade unions, some economists saying if we had a weaker rand, it would be beneficial for employment. Rand trading at 765. Would you agree with that?
No, totally silly. No. If you go through history, the only way, or the times when the South African economy was doing well, we had a fairly stable currency. A weaker currency may help us in the short term, but I'm afraid that we're simply going to lose that over time. A weaker currency is certainly not the answer. What we need, of course, is a stable currency. The currency where it is now, my suspicion is that we're probably going to see a much stronger rand over the short term, over the next year or so.
How much stronger?
Well, I won't be surprised if we see 7 to the US dollar. It's pretty much a dollar question than a rand question, because the reason for the dollar strength at the moment is because of risk aversion globally. Everybody's running to the dollar, but I think the dollar itself has got some clay feet as well, and I think the dollar will eventually, over time, as soon as stability returns to the world's international financial markets, I think the dollar will slowly start losing some of its value, and that's part of the reason why I'm bullish on the rand and bullish on gold. Not that I'm a natural gold bull, but I won't be surprised if we see 7 or so to the US dollar.
Loane, do you think if we had a weaker rand, it would make us more competitive and help create jobs in this economy?
No, I don't think the rand has got anything to do with it. We are competing in South Africa with undemocratic countries like China, where labour policies don't really exist in any practical sense. I mean, you perform productively at the end of a gun in a factory in China. We have countries like Brazil and India where they have deregulated, etc. That's really where our competition is coming from. It's not currencies. It's our peer group has been deregulating labour and other markets in the economies in which they operate, creating huge surges of growth. I think that's the remedy. I don't think the rand is material to it at all.
Would you agree, looser labour laws?
Well, of course, I think labour laws are certainly impacting. The currency is probably going to either help or suppress economic growth on the short term, but it's only a short-term thing. But I think on top of everything that he's mentioned so far is that we've got quite a militant labour organizations, all the different labour organizations, unions in South Africa, and I think that's only exacerbating the problem.
We've seen that with the strikes over the past few weeks.
That's a very good example, yes.